Hello everyone, welcome to another episode of Brillion MGT. My name is Victoria and I'll be your host for today. If you invested in stock market sometime in 2020, then you should be smiling to the bank. The surge in the increase of prices has many people asking when is the best time to invest. So joining us are our regular guests, Mr. Joe Agbeyindo and Ndubisi. Welcome, sir.
Thank you.
Welcome, sir. Okay, so Mr. Kissinger, can you describe to our viewers the phenomenal surge in stock market from the end of 2020 to now?
Well, the surge, started happening before the end of 2020 and has been on for quite some time. I would attribute a large portion of this surge to be an institution where investors had to go to the stock market because there were little and less more places where to invest. If you observe, during that period in time, the money market was really, really bad. I mean, the interest rates have been very, very low, and of course, people will not keep their money idle in the banks, but are looking for alternative places to invest. So if you rather give your money for a fixed deposit that will give you less than 1%, the treasury bill rate was very, very low. So most people brought their monies and their investments to stock market, where at least they could make some form of returns above inflation. So during that period in time, there was really a massive movement of investments from the money market to the capital market, and of course there were opportunities that a lot of companies who performed during the year would obviously release good results and the like. So people also put monies there in the anticipation of good results, good year-end results. Basically, that's really what happened at that point in time, where it was like, okay, the alternative sources of income, alternative sources of making money, where can we do it? Should we go into real estate? Real estate market will keep your money down, it's not liquid. Should we go into money market or treasury? I will say that some people that invested around that time, they've earned quite good returns. They've made some money out of it. And like I said, it's important that the returns that we made were at least above inflation rates.
Okay, so with this being said, a lot of people think that you can actually time the market. Do you think there's really a particular time for you to invest your money?
Well, timing in investments, especially stock market investments, has to do a lot with price. If you remember, there will never be a perfect time, but you will have to look at the perfect price. And that price sometimes could be as a result of some incidences or some things that happen in the market cyclically. Now, whenever there is a form of political unrest, political situation in the country, normally the market dips at that point in time, and people normally try and take advantage of that period and then invest. Even time like last year, the whole pandemic, the whole situation in the world, the country, it showed an opportunity for investment because a lot of stock prices dipped and were falling. So that also was a good time to buy. Now, analysts can also tell you that there are good times to buy when companies release results, or when companies have paid out dividend, or immediately after companies release their quarterly result, or even forecasts. People will say these are the best times to buy because you will have had a situation and a comprehensive analysis of the company's performance, and it will have been reflected in the company's price in the market, and then people can buy. I will put it like this: that timing is always a reflection on pricing. There will never be a perfect time, but it's always best to watch out for the perfect price on which you can make an investment and then make a forecast into the future of how much you're going to earn, and also do it short term and long term. It's a matter of pricing. What price is the company? What price is the share trading at that point in time? And what is the general outlook of both the industry and the economy?
Next question goes to Mr. Joe. And do you think the government policy has a major impact in the stock market?
Yeah, the economic policy of government vis-a-vis the impact it has on the stock market. If you look at 2020, government came up with different policy scenarios. For instance, we had the monetary policy rate at the beginning of 2020 was about 13.5%. By the end of 2020, it has come down to about 11.5%. That's huge 200 basis points. And of course, when you translate that into the money market, you see that government was determined to move funds to the stock market, the rate sector. We had treasury bills that was, for instance, 90 days treasury bill was at the beginning of the year about 3.5%. At the close of the year, it came as well as 0.5%. What that means is that funds will leave an avenue where the rates are low to where the returns are higher. And of course, when you look at 1 year treasury bill, it came down from about 3.6% to about 1% that same year. What that supposedly means is that when you look at the stock market, looking at how does it reflect on the stock market. Last year, bearing all circumstances in terms of travel restrictions, lockdown, what have you, we had a stock market that had from 12.97 trillion at the end of the year, and it ended with about 21 trillion in 2020. One will ask yourself, how did it happen? And of course, the turnover of that market was over 1 trillion naira at the end of the year. The all-share index also moved tremendously from about 26,000 to about 42,000 at the end of the year. What shows is that those indices reflect the fact that stock market was it. And at the end of the year, we had over 50% return on investment in the stock market. It means that government economic policy had huge impact on the stock market, given those scenarios. So the stock market was better because government intended it to be so, and policies were shifted from keeping funds to investing those funds in real estate. So moving from to the stock market.
Thank you very much. Okay, we have seen a huge fall in foreign portfolio investment in the stock markets, despite having one of the best performing markets last year. What could be the reason?
At the beginning of 2020, in 2019, we had about 420 billion naira in that market. By 2020, it has dwindled to about 258 billion. That translates into about over 170 billion naira reduction, and that's about over 40% reduction. And if you look at economy, well, a lot of shock came in there, where in 2020 we had over 50% return in the stock market. But let's sound this very well. The funds in the stock market that gave rise to that return was much of domestic fund. So over between 70 and 80% of that fund was from domestic. So nobody placed the Nigerian economy, the stock market, over the world economy. So foreign investors felt that if world economy, in terms of IMF, in terms of World Bank projection, is saying this is how the economy is going to grow, there is no how the stock market will have performed what happened. So it's a shock to the world, and I tell you that it can be a lot better if foreign investors were aware that their funds will have given them over 50% return. I'm sure they will have given their funds, they would have called it back. So the cause of that was simply because of the policy of government. One, two, the global pandemic affected them to call their fund, and that result was as a result of domestic funds into the stock market.
And the last question is from Mr. Kissinger. What sectors are looking good for 2021?
Well, there are quite a number of sectors that we can attribute to looking good. Also, the sectors, it's like precedence. Based on precedent, what kind of sectors have been performing over the last 6 months to a year? Invariably, you can say these are the sectors that will keep on performing well. Well, the financial services industry has always been a very resilient one, and I believe that will also keep on growing. I also believe that the fast-moving consumer goods sector will always be a vibrant sector. Why? Because people will always eat. People will always have people will always buy things for essentials. Also, we cannot remove the fact that the industry, Nigeria is a growing economy, is a developing economy, and there will always be need for building. So that will make sure that will know that the real estate industry will always be viable. But in reference here to the real estate industry is the cement industry, because come what may, there will always be road development, there will always be construction, there will always be need for building, and there will always be need for building materials, and that puts a plus for the cement industry. But generally, I would have naturally said that the health sector industry should be a developing sector because of what we've experienced over the last year with regards to the pandemic. However, we've not yet seen the real translation of that industry on the stock market yet, because the companies within the health industry they've not really had that kind of push yet, and we've not yet seen their books, we've not yet seen their results. Let us know that this is actually what's the. But I think financial services industry, those are always my pick.
And it's really been a pleasure having you here. And you've heard it all from our panelists. Always remember to consult your investment advisor or your stockbroker before making or taking any investment decision. Please leave a comment and subscribe to our YouTube channel. Until we see you again next time, bye for now.